Hello, and welcome to another episode of the Market After Grant series. Apologies for that. So, thank you for joining the session. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today, we'll be looking at the New York Open, trying to understand the key market trends, the key market developments, and once we go through that, hopefully we'll be able to approach the markets from an informed perspective. So I'd like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section. And these should confirm that everything is working just fine. So as we wait, I would like to begin with a disclaimer. So this session does not represent any investment advice. It's not a recommendation to trade. So you should always do your own analysis and practice proper risk management. So these sessions are always purely educational, help you understand more concepts about the markets and the key market trends. So hello, Jason and Francis. Thank you, guys. Thank you for your responses. This is very much appreciated. Hello, Tina, as well as Ice. So if you do me a favor, and I would appreciate this, just like this live session so that you can have more people joining, and hopefully we get to deliver more content to more people. So among the key highlights is one, the economic calendar doesn't have much for us today compared to yesterday. So yesterday started very early in the morning with a very important speech coming in from Fed Chair Jerome Powell. So in the speech, which was around 3 a.m., Jerome Powell basically mentioned that it is highly unlikely that the Fed will cut interest rates on the next meeting in March. So by mentioning this and mentioning that interest rates might have to stay higher for longer, this led to strength in the US dollar, and that dominated the market trends for the day. So despite all the other news we saw for the day, the dollar index continues strengthening against other currencies. So later on in the evening, we had the ISM services PMI, which came in quite strongly at 553.4. This is way higher than the previous number, as well as the consensus estimate. So the forecast was 52.0, and the previous number was 50.6. So you can see the big improvement. And at the same time, it's important to understand that when you are looking at PMI data, especially from the US, 50.0 is usually the midpoint one. So if a number is reported below 50, it indicates contraction in the industry. And if it's above 50, it indicates expansion. So in this case, we just moved from close to midpoint all the way up to 53.4, indicating that the services sector is currently very strong in the US. And from that point onwards, it means that the Fed may have to hold rates higher for longer until the services sector subsides, job market subsides, and inflation gets back to the 2% target. So later on, we had a speech from FOMC member Bostic, who carried the same sentiments, but deemed the earlier sentiment from the Fed chair. In this case, noting that the Fed may likely start cutting rates. So this could be happening on the next meeting after March, but he basically said you cannot purely rule out the 20th of March meeting. So there's still a potential that the market could experience a rate cut in 20th of March. So when you look at the FedWatch tool, which is a tool that tracks the CME 30-day Fed funds futures, you're able to identify where investors have positioned themselves. And from this chart, you can see the probabilities playing out. So this is something we have been following closely since the beginning of the year. And the probability for a rate cut during the start of the year was somewhere above 20%, but this has gone down to 16.5%, while the probability of holding interest rates at the current level has really gone up to 83.5%. So what this means is that the market is betting that the Fed will not be cutting rates in March. And as a result, we expect to continue seeing a much stronger dollar against other currencies. So besides that, now looking at the economic calendar and the events that we are expecting for this afternoon, especially as we approach the New York session. One, we'll be looking at building permits month over month in Canada. The previous reading was negative 3.9%. So the expectation right now is around 5% of the forecast. So we'll be looking at the US Red Book year over year. This is expected to be around 5%. So this is a low impact news. We don't expect to see any major news coming from this. The Red Book Index in the United States increased by 5% in the week ending January 27 of 2024. Over the same week in the previous year, Red Book Index in the United States averaged 3.59% from 25 until 2024, reaching an all-time high of 21.9%. So for those who are very new to this, here is a very nice description. So the Johnson Red Book Index is a sales weighted of year-over-year same-store sales growth in a sample of large US general merchandise retailers, representing about 9,000 stores. Same-store sales are sales in stores continuously open for 12 months or longer. By dollar value, the index represents over 80% of the equivalent official retail sales, series collected and published by the US Department of Commerce. So Red Book compiles the index by collecting and interpreting performance estimates from retailers. The index and its subgroups are sales-weighted aggregates of these estimates. Weeks, retail weeks, Sunday to Saturday, and equally weighted within the month. So now you understand what the Red Book Index is, basically measuring the retail sales activity within the United States. So most important, especially for a Kenyan investor, is that at 6 p.m., we will be having an interest rate decision coming in the Central Bank of Kenya. So knowing that on the express trading platform, you don't have the cash as an item that you can trade, why is this important for a trader? So you want to know the direction that the interest rates are moving in Kenya, mainly because they have a direct impact on exchange rates. The higher the interest rates, the higher the potential that the Kenya shilling will start recovering against the dollar. But then if the Central Bank of Kenya decides to hold interest rates at the current level of 12.5%, or even cut interest rates, then in that case, we could be seeing the Kenya shilling continuing to slide against the dollar. And we know we are normally affected making deposits and withdrawals. So if after doing your projections, you identify that the Kenya shilling is not really doing well, then you might bet against it. And it's so simple. A simple transaction of just depositing money to the trading account is taking a position where you're shorting the shilling while buying the US dollar. So just by converting money from Kenya shillings to dollars or depositing money in your account, you are literally betting against the Kenya shilling without leverage. So as you can see, the direction of interest rates has been quite stunning, especially for the last couple of years. So from 2022, where we had interest rates remaining at a record low of 7%, rates have gone up by 5.5% to 12.5%. And this is similar to what the US has been doing, but then our rates are much higher, and this makes our economy unattractive. So this is where we have loans really going up and hurting the economy. And as Kenyans, we are looking forward to a potential where interest rates now begin moving back downwards. So we'll be expecting more data. The most important one will be the Ivy School PMI in Canada. So these are measure of business conditions within Canada, and the index was reading at 56.3, the previous reading. So we're expecting a slight slowdown to 5.8, but then a surprise is also in the books. So if there's a surprise to the upside, and we have better business conditions in Canada, then know that they complicate the potential for the Bank of Canada to cut interest rates. So we don't want things really improving, or I would rather not us, but the Central Bank of Canada, because if things are really improving, they make the inflation problem worse. And as a result, the currency may have to strengthen as interest rates remain high. So on the other hand, if we see business conditions easing, or basically worsening and going towards contraction, then that would be consistent with the Bank of Canada expectations. And in that case, the Bank of Canada may consider cutting interest rates, and that would be negative for the Canadian dollar. So basically, a high number is positive for the Canadian dollar, and a low number is negative for the Canadian dollar. So later on, we have a couple of speeches from more central bank governors. So at 8 p.m., we'll be having a speech from Fed's Minister. Then at 9 p.m., Fed's Kashkari. Then later on at 10 p.m., we'll be hearing from Fed's Collins. So these three speeches will be important, especially in understanding the direction that the Fed members are taking in regards to interest rate decisions. So that being said, and now looking at the charts, we will be starting the dollar index. So clearly, it has been super strong since Friday last week. So Friday is when we had the non-farm payrolls. We had a big rally. Monday, a continuation, and then today being Tuesday, there was a slight pullback, but then the market managed to pick up and move on higher. So it's currently around the opening price for the day, but then in the last 1 hour, it basically shows that the dollar index is taking a turn backwards. However, I'm still very positive on the dollar. So as you can see, it's also being reflected in other currencies. For instance, in USD JPY, big rally on Friday, an extension on Monday. Then today being Tuesday, we haven't been able to form a higher high. And the market having faced a very strong resistance in that area, it seems likely that the market could pull back once from this level. So we don't have much volatility. As you can see, it's more of a sideways momentum. If I was to use an even smaller time frame, then you can see that it's an area that you can easily monitor as a consolidation zone, waiting for an eventual breakout. So in this case, I would map it this way, then identify the lower side, then draw my trend line right here. So in this case, if the market was to break to the lower side, I go for short selling position, breakout on the upper side, go for a bullish position. But for me personally, I'm very interested in continuing to buy the dollar, betting that the Fed will not be cutting interest rates on the next meeting in March. So as a result, I'll be more inclined to buy the dollar than short the dollar. So for Euro USD, we had an important break here of the lower trend line. The market retested the trend line and continued pushing further downwards. So from the daily chart, this is how it looks like, and there's a good likelihood that the euro will continue losing to the USD. So in this case, potential for the market continuing to move further downwards is still within books, but it's not representing an opportunity right now. So it's more of a market where you consider waiting and seeing when the opportunity comes. So it's the same case for pound USD. We had this long-term pattern extending back from November. We had a nice and clean breakout happening late last week. So after the breakout, this was yesterday. So after the breakout, you can see, this was Friday last week. Then yesterday, some further downside momentum, and today some form of reversal. So it shows that the pound is currently very strong and attempting to make a comeback against the dollar. But as we all know, whenever there is a major breakout, sometimes you might see the market doing this, going back for a retest before continuing along the same direction. So this could also be in the books. The market goes back, gets to a resistance, which was a former support, and then continuing in the same direction. So in this case, I would be still patient to wait for the market to move higher. Once I see evidence of bears entering the market, then I consider going for more shorts. So USD card has been pretty crazy, having met this major resistance here. So this is on the 4-hour chart, and once it got to this area, immediately it started moving downwards. Yesterday, it crossed on a high. They attempted to go down the first time, moved back up, and now we are on the second attempt to move back downwards. So if dollar weakness continues to persist in the market, then this could be an interesting area to look for a short side position, the USD card. But then if there was to be a clean breakout above this area, then the bullish position would be also something to consider. So looking at gold, it also made some significant drop towards our expected targets. So try and remove this. And now we have a cleaner chart. So this is the overall momentum that we are seeing in gold. So if I was to draw a trend line, I would say this has been the resistance, and the support has been following this path here. And what we are seeing now on the 1 hour chart is a market that just bounced off support. That was yesterday. And today it's attempting to move even higher, despite there being a very strong US dollar. So in this case, there's a good likelihood that at some point, gold will start weakening again against the dollar. So looking for short selling positions might be something of an idea. But for now, from a technical analysis point of view, you can see that there's these three areas where the market was facing a lot of resistance. So the upward momentum may likely extend this area. And once it gets to this area, then perhaps we start observing to try and make a decision whether there will be a continuation or a reversal. So for AUD-USD, this is what we're experiencing here, a market that managed to break below support, retest, and now I expect to see some further downside. But it seems to be having some weird correlation with gold, and as a result, would be seeing some short-term upside volatility. But then long-term, I'm expecting to see some further downside momentum until we get to this previous target of 0.64509. So US equity indices are currently challenging a major resistance. So if the Nasdaq manages to break above this area, then we will be looking at another yet all-time high. And currently the market is pushing through. So there's a good chance we could be seeing an all-time high forming above this area. And for the 4-hour candlestick, you can see the way the market is rejecting attempts to move downwards, which seems potential for buyers to be entering on these tails. And we could be seeing the market cruising above this resistance and forming yet another all-time high. So from the daily time frame, you can see this is the 4th straight day we are seeing bullish momentum, and this would break and form a new high. So US 30 or the Dow Jones is also struggling to form higher highs. So despite forming a higher high on Friday last week, yesterday was clearly bearish. Today, the market has more been of a sideways momentum. You can see right from the open of the market in the day, we haven't had much momentum. So it's not a market with a very strong volatility. So I would be a little bit more patient of this to try and see where the market might be headed next. So as for now, it seems likely that what we are seeing here is a market that is breaking the lower trend line and attempting to move further back downwards. And if you try to draw all kinds of trend lines here based on the previous bottoms, then they're also indicating something similar, that this market is really attempting to break this area here. And if that break downwards happens, then we would be seeing the market being ripe for a correction after hitting all-time highs. So investors are currently very worried about potential stock market correction. And we have already seen that happening, especially in Tesla shares. So while other tech companies are continuing to perform well, including NVIDIA, Tesla has had a major hit. And this is affecting the confidence in the market, especially for US 500 traders. So even though lower prices are being rejected strongly, like you can see from the forward chart here, lower prices were rejected pretty strongly. From the 15 minutes chart, you can already see that there's nothing much happening in these charts. So if that's our major resistance, and let's say the major support is around here, then this is more of a sideways momentum with one exception. So for the last, I would say 2 days, the market has only attempted to go downwards once, then got back to the range. So we don't have much of an activity happening in the S&P 500 as at now. So it's more of a wait and see scenario where we have the market ranging between a resistance of 49.54 and 49.34. So a break higher would mean a continuation, whereas a break lower would mean reversal. Then for Brent oil, we are seeing some good recovery right from yesterday after the market hit a major support here. So this support level is something that we are strongly observing here. So the market bounced quite strongly, and today is attempting to move even higher. So in this case, I expect to see some further upside momentum continuing the day, and perhaps to close on a high. So potentially targeting the $80 price level might be the way to go here. So to be specific, 80.325. So European equity indices are also attempting to form higher highs, beginning with the Euro 50 cash index, which is attempting to break the day's high and also last week's high. So it's something that seems to be playing out quite well. And if you look at, need to see another one here. I think I misplaced my French 40 index. So I'll try and find it. So the same story here for the French 40 index, an attempt to recovery. Of course, we have seen that the market has already broken a major trend line, that it was forming here, having formed a sequence of lower lows. But then after breaking that particular area, what we are seeing is an acceleration upwards. Perhaps this is the trading idea for the day. Market forming this kind of flag, then breaking to the upside, always has a potential that the market could rally all the way up and get to this area here, which is the top of the pattern. So this is something you can potentially consider trading. From the 4-hour chart, that's how it looks like. The 1-hour chart, if I zoom out, then this is basically how the chart looks like, which is an indication of a potential continuation trade. So I'm sure everyone can see this bottom here, and the second bottom, the third bottom, and the fourth bottom here. Indicating the market successfully bounced from the lower trend line with a nice pin bar, and is now accelerating higher. So we could potentially see the market making such a rally and getting to this upper trend line here. So besides that, we have seen Chinese equity indices make some good rally, beginning with the China A50 index, which is up, I would say from yesterday, it has hit a high over 7.5% before erasing gains, and there's a good likelihood we will continue seeing some further upside momentum. So remember, these equity indices have been trading downwards for the last 2 years. So if you look at the weekly chart, you'll notice that the last time the markets were trading this low was just before COVID, around January 2020. So now that the valuations have really gone up, so from the most recent high, I would say that we have hit about negative 47%. Then having hit that bottom, it seems likely that the market may start to recover from here. And that's why we are seeing some strong momentum coming in. So another Asian equity index is the Hong Kong 50. So the Hong Kong 50 index has also made some impressive recovery since yesterday, being up 4.77%, and with strong potential for moving even higher. Then it might become one of the best bets going forward, and we have already broken this trend line. So this trend line has been holding quite well, but then from what we are seeing here, the market failing to form lower lows, now breaking the upper trend line, then the potential for a rally from this point going onwards becomes quite significant. So in this case, I expect some further upside momentum coming in from the Hang Seng 50 cash index. So that's it for the day. I hope you enjoy trading the New York session. So if you have any questions, be checking on the live comment section, see if there's anything I missed. Could you go over New Zealand ZPY? Wonder how you trade that pair. There's 2 options. You can trade New Zealand USD and USDN. Hello, Manthi. You can see Ice Mike, Tina, Maurice, Patrick. Was there a snapshot episode at 11? I didn't make it there, and I'm searching for it to go through it. Share the link, please. So there was no snapshot earlier today. There was some technicalities. So we are introducing one more analyst to be presenting in the snapshots. So as we all know, I started the snapshots alone, doing the sessions Monday through Thursday. Then we introduced Samson Zera to do the Friday sessions. Then later on, we introduced Norbert Kiza on the Wednesday sessions. And now we're introducing Robert Mbogo from Thika handling the Tuesday snapshots. So though there was technical difficulties, rest assured that the snapshots will be continuing as usual. Hopefully, we will not have a challenge on the next Tuesday. So that being said, I'd like to thank everyone. Thank you for your time. So let's check the request here for New Zealand APY as we approach the end of the presentation. So it's not a chart that I've been looking at. So this is something I'm looking at afresh. Seems pretty noisy, not very clear directional trends. From the daily chart, this is how it looks like. So from a top-down analysis, the first thing I notice here is that the market has been obeying this trend line as a very strong support. So whenever I see a chart like this, then I'm interested with anything that happens around this trend line, be it a bounce or a reversal from this point. So I'll try and zoom out and notice the key price levels in this chart and notice that there is a strong resistance here, which has been repeated a couple of times before the market broke out and moved higher. Then I try to identify the topmost level chart. It's around 91.451. And now I zoom back again, go to a lower time frame, in this case, the 4-hour time frame. And from the 4-hour time frame, I identify that the market has now been changing direction and is now moving downwards. And this is based on the sequence of highs in this market, meaning that the market is forming lower highs. So we have lower highs, higher lows, and clearly this is a triangle kind of environment. So I would say like from this point to this point is the average price direction. So with that in mind, now if you go to a smaller time frame, let's say the 1-hour chart, then you can see the big swings are happening during news. And then after that, the market begins to consolidate. So if you go to a smaller time frame, then this is what we are seeing here. I would say something along these lines. So this seems to be the probable support area, not very smooth, but then the resistance is kind of smooth, repeating itself quite significantly, and some form of horizontal support here. So support, 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 an attempt to break, market goes back in, down, and now from here, I don't expect much of an activity. So perhaps if the pattern continues, if there's no news, then the market just gets to this area, then proceeds maybe back to the upper side, and we don't have something to work with around here. So for me, that would be my theory if I was to be the one trading New Zealand's APY. So it's a wait and see until there's a major move, doesn't seem at all promising to me. So I'm seeing one last question here. Is it worth to combine with Fibonacci another strategy or stick to only one? Fibonacci is not a strategy. It's basically a tool that you use to estimate the bounces in the market. So a technical analysis tool cannot just be summed up into a strategy. So the strategy you have has to have multiple features, defining your entry points, exit points, the kind of markets you participate in, risk management, among other things. I have a question from FOMC and NFP release. Help me to understand that I was watching the previous live session on Fed inflation, but I understand where he said if a formal cut, then NFP is going to see. I don't get the question properly, but I will try and just highlight it. So the thing is, from last week, the number of jobs came in pretty strong. And this shows that there is a very strong US economy that is able to maintain high job growth. And as long as there's more people being employed within the US economic system, it means that they are getting paid and they have more money in their pocket, creating an increased demand for goods and services, which leads to higher prices. And as a result, you expect to see inflation continuing being a problem. So then from the Fed decision to basically hold interest rates at the current level of 5.5%, which is quite high if you ask me, then this leads to a very strong bonds market, attracting out of capital and driving dollar scarcity. So as a result, there's the expectation that the dollar index or the dollar will continue being strong against other currencies. So nothing has changed from the yesterday morning speech. Jerome Powell iterated the same comments. And as we proceed with the week, I don't think anything is changing. Even the data coming in the evening yesterday from services PMI basically added to the belief that the dollar will remain strong. And unless we see something different, then that remains the case. So it's not always advisable to trade when, let's say, there's a news announcement. Sometimes the quiet market that represent the best entry and exit opportunities, whereas news will bring in volatility, which expands your risk as well as your potential returns. So thank you guys, and see you on the next one.